Hello everyone.
Hi.
Yeah, another Saturday, another weekend. This is a very hot day today, actually.
Lovely, isn't it?
Yeah, it's lovely. I think everything is finally feeling a little bit summerish.
We had a seal land on our beach just outside our house
Really?
last night.
Okay.
Came home and a seal, and it stayed overnight. It's resting apparently once it's been out feeding.
Wow.
So all the rangers were down there and everything. So it's gone now.
Good, good, good. So this is Peter.
I'm Gary.
Yeah. Let's get into it.
Yeah.
So this week we have a couple good news. I think 11 million, 20 million is just numbers now to us, isn't it? Yeah, but what this is so interested is not only the buyer Chris Rex is a very representable figure in Sydney, who was the ex-CEO of Ramsay Healthcare. Like we keep saying weeks after week, we say when the big houses get sold, next one is gonna get pushed up, the townhouses and the apartments, and now there it is. That's the actual evidence about the apartment market is now finally back to its feet.
Yeah.
So Chris Rex buys Bondi Beach Penthouse for 11 million after selling Tamarama Trophy Homes for 11.5 million plus. And the yield of getting Australian properties are actually very much proven recently through many different auction results and then selling prices. And for this one, it's in particular, we're gonna go into it to see how much they paid for. I think it's in here. The Boham Penthouse in Hull Street, Bondi Beach, record shows it's owned by the Southern Africa-based Investec Bank co-founder Lawrence Nestedit and his wife Cheryl, who paid 5.8 million in 2014.
The vendor, yeah.
Yeah, so the vendor pays 5.8 million for this property back in year 2014, and then they have got it sold at 11 million.
It doubled his money in 6 years.
In 6 years on an apartment. So we got this a lot, and people saying, Pete, you say big houses and all that, yeah, so that means the apartment market is weak, isn't it? Well, there you go. That's the thing. And the deal was done by Barry Goldman. He is actually the ex-husband of one of my ex-colleagues. Yeah. So we heard of him by reputation many years, and it was done through another buyer's agent, Simon Coleman. Together, they have got it sold. And what's so interesting about this one is that the property is 214 square meters. So that means the buyer actually paid for 51,000 per square meter on this house. Yeah. So now officially, Bondi Beach are moving into 50,000 per square meter era. Where I would have never thought that would happen, even though the previous Australian apartment record was in Bondi Beach anyway. But talking about 50,000 square meter for apartments, especially second-hand apartments in this market, is absolutely very cheering news. We have seen similar price points now down in Macquarie Street in Circular Quay, somewhere in the Rocks. Only in the high-end prestige areas. Now looks like it's now starts spreading out, especially after the booming of houses in eastern suburbs.
Bondi is special, and people like Bondi.
Yeah, and people need to find a place to live, right? So where does those people who sold their house for multi-million dollars,
$11 million.
Yeah, 11, 20 million, where would you go, right? Yeah, there we go. They go to Bondi, and then Bondi is gonna get priced out, and then people are gonna move into other areas. So, and it's just not a singularity event. The same combination, Barry Goldman and Simon Cohen has hatched the $7.25 million sale of former cricketer Michael Clark's Bondi Beach apartment in February as well. And then they have also sold. So Barry Goldman and Mark Goldman has also recently sold a 3-bedroom penthouse in the Pacific which was one of the projects that when I first started my career, it was one of the first projects that I've been selling. It's on Campbell Parade, so it's on the main road. It's on the main street.
Renamed Campbell Parade. It's a bit down market, isn't it? It's like Grand Boulevard.
Yeah, that's right. That's right.
It's actually the road right along the beach.
Right along the beach. Yeah,
So,
yeah. Signature road of Bondi Beach, and for 7.8 million.
yeah. I think they should rename it. It's like Parade Days Irishman. A bit like the one in Saint-Tropez, like Parade Days Anglais and everything, but Irishman everywhere in Bondi.
Yeah, and they have also sold another 3-bedroom apartment with limited views through the arcade in the beach house at 178 Campbell Parade for 3.825 million. All right. So these are the interiors of the apartment. So it's been slightly renovated and upgraded with the track lights, and looks like the floor are new as well. But we are just very, I'm happy to see that the apartment market has finally started booming. And I think this will be not just singularity event. We're probably gonna see more news like this in the coming weeks.
I think there's a few. I think basically what I see there is he sold in Tamarama and has moved up to Bondi, which is not very far away. He swapped a house, given his age, not being rude to him, but he's swapped a house for an apartment. So, but yeah, I mean, the apartment will remain patchy in certain areas. The rest of the apartments, I mean, apartments where I live up at Colorado, they're just going, they're gone a week, So, I think it's just one or two areas where there's been an oversupply, or whether the market dropped as it did. That's what's got the apartment name a bad name, but it'll come back.
It'll come back. Yeah, and now let's look at the.
It'll come back where it's bad at the moment. Elsewhere, it's still good.
That's right. That's right. All right. So next one, we're both brave young home buyers are taking advantages of the property market. So we've been talking about first home buyers. We've been talking about new buyers now going to market after doing the simple calculation and found out why am I renting? And this is a real story about one of those first home buyers and what's going on inside their head and in their mind. So this guy is, his name is James Brown. He is only 20 years old. He has just signed the deed on his first property, even though he still lives at home with his parents. So he bought.
How old is he?
He's 20. He's
20.
just 20. So he's still in uni. So he's still a university student. He said, I always thought property was a good wealth creation strategy, the university student said. So James has bought this property with his cousin, Marty, who is a full-time for the army, have separate deposit savings. He had a little bit of a deposit, so did I, so it went in 50-50.
It's good.
Yeah, there you go. And then we thought it'd be better to buy in a blue chip location where capital growth is higher. Well, whether that's arguable, a lot of people are saying, regional this year is actually a winner compared to the blue chip location. But, with the special circumstances this year, in general, long run, depending on what you buy, this is actually.
Well, they've obviously taken advantage of the stamp duty.
That's right.
Discounts, etc.
Yep.
$750, they'll probably get no stamp duty.
Mm-hmm.
And they can both take advantage of it, as I understand it, with sharing, which is great. And it's a good thing. I mean, the cousin's off in the army, so he won't want it to live in for a few years. So a good investment, and he's done the same. And then come down the track when one will actually move into somewhere, and he wants to move out from dad or mum, or go in the army, gets fed up of being in the army, and they got somewhere one can live in.
That's right. And then he said have a saving plan, be disciplined, and speak to the right people to get the right advice is how he get himself in here.
Yeah.
Very smart young person. And it looks like there's more and more people like that now in the market. If some people say that to friends and family during COVID-19, I bought a property, they're worried everyone would say, "Are you mad?" Many people might have
That's right.
confidence to argue against them, so they rather not take the action. He added it, but the thing is, you're never going to be 100% certain anyway. So we would have we could have another COVID-19 or something else around the corner, but the market recover. So there you go. According to a research that recently being said, for people that's under the year of 25, 43% of the Generation Z has believed now is a good time to buy property. We're 59% and 58% of Generation Y and X has been confirming that it's the case as well. So it looks like more than 50% of people from majority of the market now believe it's a good time to buy.
Yeah. Right. Well, I think it is a good time to buy. Now is a good time to buy. If you've got a good job or whatever.
That's right. Yeah.
Make sure you can pay the mortgage.
That's right.
But the other thing I was just going to say, it suddenly hit me. I'm not sure how eligible he will be for stamp duty because
this is
it's for owner occupiers. It's an investment property.
Yeah.
So he may have missed out. But nevertheless, he's still gone ahead. So
but the thing is,
smart.
well, for 750 to even close, I mean, how wrong can you be?
That's right. No, you wouldn't be wrong in terms of the property.
That's right.
Just you may not be able to get the stamp duty relief.
That's right. And it looks like a lot of people are thinking that the second thing now. Now the market gets hotter and hotter. People just trying to get the right property. So obviously there are other investors in the market who's trying to jump in as well. One of the professional investor has said he has bought 14 properties in the GFC, because he can get a bargain. However, the difference now compared to buying during the GFC is the interest rate. They had a much higher interest rate then in the GFC compared now. So, the market has never been really good in terms of interest rate and then government support, all the incentives and everything. So maybe you're getting 3.5% rent, but you're borrowing at 2.5%, and that's still a 1% positive growth, which you have never had before. There you go. Yeah, and I don't think that he is a singularity event. I reckon there will be more and more James Brown jumping into the market. Hopefully can get back something as well.
yeah, he's got to get himself properly working.
Yeah, that's right. XPAC's eye Sydney's Lower North Shore as they continue their march home. So XPAC has always been a very strong buying force this year for medium to high end market. We have come across many of them as well. I think the driving force because of COVID this year, a lot of people really thinking about coming home, and Australia has done so well in terms of maintaining the COVID and then
found some wood to touch.
touch wood.
Touch wood, yeah.
Right, just bottom of the table is fine. But we've seen a lot of things happening this year. I don't think going back again, Australia would have done much better, except maybe they can close border earlier. But back then it was just gonna be too much resistance anyway. For them to do so. Yeah. But anyway, let's take a look. At the end of the day, the property market still, got a lot of attractions. Regardless what happens. This is something that the expats are still looking with. Sydney is still one of the prime location that they're thinking about buying. Yeah, I think we talked about this property before, where the buyer are US based expats. thinking about coming home. It's a 4-bedroom beachfront reserve home. Before it even come to the market, it was sold. Before it even not come to the market, before you even get photographed. And then the buyer just simply made an offer that the owner just couldn't refuse. Yeah. It wasn't close. It wouldn't disclose how much, but they said it's around a sort of $12 million range. Yeah, $12 million range. So the market was continue to fire. And apart from, it's not bad yield for the owner. They bought the home in January 2013 and sold it in 2020. They bought it for 6 and sold it for 12. Very good.
Again,
Double. Yeah. And being an owner occupier, no capital gain tax.
that's right. Yeah.
All right. Not a bad yield. And this year,
But you got to live somewhere. Though. You got to buy somewhere else.
that's right. Yeah. But I think with 12 million, they have a lot of options. Maybe not so much in the suburb, but yeah.
Right, I guess so.
So we're going to be running auctions as late as December 22nd this year to keep up with the demand.
Really?
Yeah. So it looks like, this is the agent that's doing it, and we're gonna do the same thing as well. We wanted to be able to run as many auctions as possible to making sure that we are going to proper wrap up this year, because there's just a lot of interest in the market.
Yeah.
And with the weather getting better, every Saturday I see a lot of people with brochures walking around. I drive through multiple locations today, all the way from the western areas back in the city, and every open there has been, there are people there talking to the agent, making offers. Again, another property is also sold in Mosman for close to about more than $4.3 million, and now this time is expats from Shanghai. So people not just returning from US, people also returning from Shanghai as well to Australia, like me. And more than 100 groups inspected renovated 1930 home with the pool, and which was due to go auction last weekend. However, I think we just got snatched right before that. Yeah, right before that. And from the agent, they said a majority of the expats are looking at properties between 3 million to 8 million bracket. And then not only the houses are selling, they also wrap up a few apartment sales as well, all prior to auction, totaling more than $8 million in the week. So for all agents, it's been a good week.
Yeah. I think all agents are doing well at the moment.
Yep. All right. So from Harrison, very, very strong sale price for this Melbourne flagship store for the international known luxury brand. And I can never pronounce this name right. Whatever I pronounce, they say just not right. So we'll just leave it as LV. A classic Collins Street building, home to this beautiful home for LV for a long time, has recently been exchanged hand. Colliers managed to sell. They have got more than 350 purchaser inquiries from all over the world. Majority of them are in Southeast Asia, China, America, and Europe. And then the original owner bought the property at about 16.2 million in year 2006, and now has sold for whopping $65 million. The price guide was $50 million.
A lot of money.
A lot of money. So we're not just talking about double here. How many?
No, 4 times.
4 times, since 2006.
Again, what's that? 4 years. You made 4 times your money.
That's right.
It's better than Bitcoin.
That's right. And what's interesting about this particular address or this particular building is that the 15 competitor who actually went into the final offer and the silent bid war are really all international investment funds. So majority of the buyer that actually in the final game are the international buyers, which the agent has prepared virtual tours, detailed building reports, extensive sales materials to help the international investors who could not travel to Australia to physically inspect the asset. Yeah, the lease is not going to be finished until year 2026. Yeah, for this building, which was built back in 1886.
Yeah. I think the important thing about this one is what you said, is that it's a heritage building, and the likelihood of getting any development on it.
You can't knock it
Pretty
down.
small.
You can't knock it down.
So, you just, even though it's well positioned where it is, there's not a lot of room for being creative and creating more income. It is what it is, So that's an incredible price.
Incredible price. Yeah, and then he said the sale would be a demonstration of the robustness of the Melbourne CBD market, which has been hit hard during Victoria's coronavirus.
Yeah.
Yeah, so Melbourne, whatever you see, the prices didn't decrease or whatever, it's just temporary thing. You mentioned these things will recover. A 20-year-old knows that's going to recover.
All the people who can't buy in Sydney will have to go and buy in Melbourne.
That's right. That's right. Okay, Sydney auctions this week. This is actually quite shock to me. $11 million in east suburb, I think it's okay. But now we're talking about an area called Harrington Park. And this is about 1 hour drive from where we are now in the city. We're in Darling Harbour at the moment, so it's about an hour out to the southwest. Way past Bankstown, even further.
Oh yeah.
To Harrington Park. And then what's got me shocked twice is first is price, because this is Harrington Park. Another thing is this is actually get auctioned half finished, so it's not even been built properly yet.
Well, yeah, okay. Let's go through it.
Yeah.
I mean,
So
who sold it? The builder?
It was
developer?
the purchase price was
Who sold it? That's what I'm trying. I mean, does the price include the building being finished?
very interesting. I haven't seen it.
I presume it does.
I presume it does. That if not, that means they had to spend another X amount of money.
I would imagine they've sold it with it completion date, and they don't pay all the money till it's finished. I'm imagining.
Yeah.
But 8 bedrooms, 2 crystal chandeliers.
And
As if you could
integrated
live in
sound.
a crystal chandelier.
And integrated
sound
sound
system.
So to an eastern suburb couple. There you go.
I'm sure it is. I'm sure it's a deal where it's half built and someone's bought it on the basis that the builder will finish it off.
Finish it off. Yeah, like off the plan.
Then they'll pay the
Yeah.
Then they'll pay the money, rest of the money.
That's right.
Up in the deposit.
Yeah.
So it will be a big house. I mean,
It
look
will
at
be a big house. Yeah. It's about $170,000 over the reserve.
8 bedrooms. What's that work out? That's $250,000 a bedroom.
Yeah. So this is the foyer. It still hasn't been finished. They still need to put in plenty of work.
Oh gosh! Look at the wooden.
This is just that. Yeah. It's not even fit. Like this is just.
So
And look
I
at the
think
pool.
it's the pool.
Look at the pool.
No,
It's not
it's,
even.
They've got any grass in that garden nowadays?
Yeah, they haven't even planted it. See? It's not even.
But
Yeah, the landscaping is the only thing they have finished.
everything is in the building.
Yeah.
That's what I mean. That's
right.
For an 8 bedroom house, even out there, it costs a lot of money. So that estimate $1 million to build the building.
They
So
said
far.
they have spent $1 million already.
So far.
Yeah, on the build, and it looks like there's gonna be much more money to spend along the way as well. And the property was sold for $2.07 million in Harrington Park. And what's crazy about this whole thing is that it's not even the most expensive property in Harrington Park. The record price for Harrington Park is $2.345 million, which was set in year 2017.
Yeah. 740 square meters of
internal space.
Yeah.
Yeah, it's a big home.
Big.
It's a big home. Yeah. Yeah, but looks like
Lost it.
you know
Imagine playing hide and seek in that.
that's right. You can.
8 bedrooms, God.
Yeah, but like 2.07 million. That's just in Harrington Park. All right. So you know the prices keep it just
But you say that, I know Harrington Park, but prices up on the North Shore, on the beaches area, which aren't on the beach, obviously, clearly they're set back quite a way, 400 or 500 meters. They're all going for about 2.
yeah, they're all going for
But you get a house which you've got to spend a lot of money on, which is nothing like that. So if you have a business out west or your job's out west, it'll be a good deal.
Yes, yeah. Everything happens for a reason, right?
Yeah.
Yeah.
Your air conditioning bills will be huge.
Especially like on a day like this, right? Especially on a day like this. Sydney Auctions, North Shore couple paid $1.506 million for Forest Lodge Terrace. So this particular property, this is what it looked like. So this is the exterior. It's a beautiful looking property.
Yeah.
By no means, this is just, yeah, the way it's finished and all that, it makes sense why people fall in love with it.
Yeah,
I get it. Yeah, but on the other hand, there's no courtyard, there's no view, it's in Forest Lodge, and it doesn't even have a lock-up garage. It's off-street parking actually, and it was sold for $150,000 above the reserve price.
But it's a house, and I think as the guy said, what could he get? Where if he lived, just move around the corner, he couldn't get much.
That's right. So the buyer come from Lower North Shore. First Lodge is somewhere in the west, sort of on the edge of city and in the west on the border. And it's interesting now we start to see the buyer's agent start proceeding with $1.35 million bid ban on the reserve. So normally as an auction, the starting price wouldn't be the reserve price.
Yeah.
But now even buyer agents start to really snatch it and try to snatch it at a reserve price, the starting bid, and then increased by 45,000 immediately to 1.45 million by another buyer, and then the bid will keep going between $1,000 and $5,000 increments until it was ended up at 1.5 or 6 million. And the buyer was still very happy because he said, if I'm going to buy this in Lower North Shore, try to snatch a property, this will probably just be a 2-bedroom apartment.
Yeah.
There we go. Hug and kisses. And congratulations.
It's probably the agent.
Oh yeah, well, I never get to do that. All right. If this is what we do, maybe I'll start go back selling rather than doing the live stream every week now. And this sale was one of the about 838 Sydney auction scheduled for this weekend, which is slightly less than last week.
The thing I'm hearing is stock.
Yeah.
That in terms of the normal residential agent in suburbs, the only thing that's stopping them from selling more is obviously getting instructions. They just haven't got enough stock.
That's right. Yeah. There's and
so if you want to sell your house, now's a good time.
That's right.
Basically.
That's right. That's right. Yeah, and it's strata title as well, by the way. It's not even a Torrance title. Yeah. So townhouse, apartments, time started. If you haven't really jumped in yet, be quick because you already see townhouses, apartments start flying. All right. So follow up on last week's interest rate cut. There's been more articles coming out about when Australia enters the era of history low of 0.1% interest rate from the RBA, what would happen? Obviously, across the whole Australia, the banks start to follow up. So last week we talked about CBA is going into 1.99% interest rate.
That's right.
Yeah, and
for fixed rates.
For fixed rates, and I've got this email sent in from Westpac and saying now they're doing 1.99% as well on a 4 years fixed rate, and looks like the other bank is going to follow, and yeah, they all do. So finally, for the actual cost for individual borrower, we are now officially under 2%. Yeah, we are now officially under 2%.
If you go fixed it, yeah, that's the way to do it.
Yeah, and then the interest in the market become a lot higher. Realway Group, which is one of the largest local agent in, well, I would say Australia, basically.
Yeah, right, yeah.
Yeah, has registered 297 auctions last week, and on average, 5 bidders were registered to come to the auction, and then 3 of them were actively bid. Yeah, which, 2 years ago around the same time, they couldn't even get an auction started because no one would register for it.
Yeah.
Yeah. So from what we've seen so far in this market, looks like this whole heat in terms of people trying to get into the market are now there. And then Realway sold 79% under the hammer. Another very strong metric is typical clearance rate in the 70s, means the price are on the rise.
Yeah. But one of the things I was going to say is that in America after the election, interest rates, mortgage rates especially, dropped. So I think our rates are going to go lower. Okay. But still, if I could find the right place at the moment at 1.99 fixed for 4 years, it's still a good deal.
Very good deal. Very good deal. On average, as an owner occupier, RBA data shows that the principal interest loan sits around 3.12%. Yeah, on average.
Yeah, that's because, as they said, variable rates are higher.
That's right. Yeah, and a lot of people has already fixed their interest rate when it was high anyway. Yeah. So, but at the end of the day, if it's average 3.12%, and then for Sydney, the average yield, gross rental yield for houses 2.7%, and average rental yield for apartments is 3.3%, which being the history record low. So we have never had a yield this low before.
No.
But if you're paying 3.12% average, and then your apartment yield is 3.3% on average, that means, majority of the people, on average, everyone makes money. Or positive cash flow. Let's just make it that way. If you can hold it.
Yeah.
So.
And if you've got the deposit to go in first.
That's right. Yeah, but with the stimulus and all that, it's good to see that the government has done the right thing, and the bank has followed up with it as well to make everyone more stable. Once you buy a property, people will become a little bit more subtle in their life as well, and disciplined and just try to pay the rent. It's a good, and at the end of the day, it's a good investment to have. Yeah, and I always regret that. I never regret that I have bought properties. I only regret that I bought property not early enough.
Right.
Yeah. So even though the price point now, for some investments, it looks like you're bleeding money because you probably will have capital loss. However, in terms of the long run, if I bought it maybe 5 years ago, I would have made money anyway. But I just didn't have the guts or the stableness of my job to actually go into the market at that particular time. If I had what I had, then I would try to buy anything that comes to me as an opportunity. So just tell Max it's not too late. We'll get him a job and then we'll get things started.
That's right.
Yeah. All right. So before we wrap it up, there's just 2 quick diagrams, data to show about house prices. So first thing is house price regional beachside heavens flourished during COVID. The coronavirus pandemic has accelerated interest in beachside and regional living, adding to strong house price growth in many areas already popular before the pandemic. So we're just quickly gonna jump to, because the timing is pretty much gone, and let's go to this to have a look. So this one is a quarter-on-quarter price growth, by region. And this is between July 2020 to September 2020.
Yeah.
So basically last quarter, the second last quarter of the year. New South Wales are the biggest winner, where areas like Coffs Harbour has been increased by 8.7%. And North Coast has been increased by 8.3% a quarter.
They're on a quarter. That's the thing people got to think of. That's huge. That's like 32% per annum.
That's right.
Plus.
Yeah, and then Victoria, we're talking about 340, 425, all these price points. South Australia, 220, increased. This particular area called Wheat Belt, I'm not sure where that is. Wheat Belt?
That's all of Western Australia. It's all the wheat belt, isn't it? I don't know where.
Yeah, 11.7%.
Yeah, Bunbury's on the coast. So, where wheat belt is, it must be, I imagine, a vast area of the inner side of Perth. It's a huge area.
And then back into, and because this figure was quarter on quarter, so a lot of people question about, it's only 3 months, it may just be a one-time thing, or it may be just some sort of singularity events and all that. So let's move on to the next diagram, which is a 20 years comparison for the regional suburb across the strongest house prices growth by regional suburb between September 2000 to September 2020. Look this number.
Look at it.
Bangalore. In year 2000, you could have bought a property in Bangalore at a median price at $76,000, and now it's 1.05 million. The increment is 1,281%. That is insane.
Huge, isn't it?
It's huge number, huge. Fletcher, 800%, 804%. Glenroy, 741%. So it looks like, in this diagram, New South Wales are the best performer.
Oh, well, they always are.
Always
well,
people.
no, maybe not in performance, but certainly in terms of price.
Yeah, and you're looking at Victoria,
Tasmania, how's Tasmania done? I thought Tasmania would have gone quite well, but it seems to be low.
Tasmania,
over 20 years. Over 20 years.
Over 20 years, yeah.
We're still higher than places like Western Australia. Western Australia's really suffered,
That's right, yeah.
So is Northern Territory as well, and that's right.
Yeah.
So
Tasmania and Victoria and South Australia are very strong. Queensland is strong as well, but not as strong as New South Wales. New South Wales is just unbelievable. And then we're talking about now over 20 years, we're talking about 400, 500, 1,000%. So it looks like, if you are trying to invest, a diversified portfolio is now, a very good thing to have. And then the biggest winner, so the main beneficiary close to capital cities, Victoria, Geelong, which you mentioned before, very close to Melbourne, but get its own capital. Bendigo, Ballarat, and Latrobe. New South Wales will be Illawarra. I had a friend who had a large piece of land to sell in Illawarra back in 2018, and he offered me to get in with him, and it was like, and I said no to him. How stupid I was.
well, it depends where it is.
But and it's the next, like the street right opposite has already been rezoned. Southern Highlands and Shoalhaven and Hunter Valley. Western Australia, I'm not really familiar with Western Australia, but Queensland Gold Coast
Yeah,
We have
yeah,
house, we have
yeah.
house and apartments on Gold Coast, so looks like we haven't been missing out much. You know, how's Sunshine Coast? Have you been there before?
Yeah, it's nice.
Yeah.
It's just the north of Brisbane.
On north of Brisbane.
So Gold Coast is sort of 50, 80 south kilometres, and the Sunshine Coast is the equivalent of the Gold Coast, but to the north, and it's not as built up like the Gold Coast. That's where Noosa is.
Ah, okay. Got it.
You don't think about Sunshine Coast, you think about Noosa.
And then the last one for today is house prices are on the up everywhere in Australia except Melbourne. And it's not Melbourne's fault because Melbourne has really going into a long lockdown. It's not even because the prices dropped, it's because people can't even trade. You know, they can't even do open homes or do anything with it. But in general, for the past 6 months, here's the data.
Melbourne's going to go into mad catch-up mode now, isn't it?
That's right. Yeah, I think it's a good idea to actually get something in Melbourne.
Yeah, I think it might.
Yeah.
Dan, I'd get the next flight to Melbourne and go and buy something.
Yeah, my friend owned quite a few commercial properties down there as well. We were down there about 2 or 3 years ago and trying to get a few offices and retails in there on the same street, which is roughly about 5 minutes walk to the Louis Vuitton retail. So, and back then the offices like 200,000, 300,000 per office with a yield about 6-7%. Buy and wait, don't wait to buy.
That's a good thing. Buy and wait, yeah.
Percentage change in house prices, March 2020 to October, this is on average. So regional New South Wales are the biggest winner by 3.3%. And then the Greater Melbourne has been the one that actually lost the money, which is about 1.2% negative. But just like this, a lot of external force problems. I think Melbourne is gonna come up.
Oh.
Yeah.
And
And change in unit prices, March 2020 to October 2020. So unit has not been that steady compared to the houses because of the vacancy, the yield, and all that. Greater Hobart has been the winner in the unit market, which increased by 2.7% between March to October this year. And Greater Sydney has dropped by 1.2%, which is why I really think it's a good timing to actually come to Sydney to get something. I think Melbourne, Sydney, and now it's good timing to actually go and get snatch a bargain.
once we open up,
Yeah.
I think we've still got to wait for the international opening, but once we totally open up, Airbnb can get going again.
Yep.
We'll have to wait a little bit longer until we get the international visitors for more Airbnb and for the student market.
Yep.
Once that comes back, boom, prices will catch up.
That's right. Boom. That's it. So I think that's pretty much it for today. The last bit of information would be the strongest price growth suburbs October 2020 on a year-to-year change. New South Wales, we got Byron Bay, Killara, Newport, and Wyong, is it?
Wyong,
Wyong,
which is up.
which is
Central
up.
Coast.
Yeah, which is up. Yeah, and then and the biggest winner on year-to-year growth is Sunshine Beach.
Yeah.
Yeah, which is
Queensland.
went up, it went up by 46% or 48% a year.
Who's the winner?
Sunshine Beach, Queensland.
Oh, right, sorry, Well, apart from us.
Yeah, but in here,
The winner outside of New South Wales, we'd say.
no, it's the overall winner. So year-on-year growth, Killara
Oh, I
is
see,
30%,
right.
where Sunshine
Oh, I
Beach
see,
is
it's that red dot,
47.5%. Look at that. So that's almost 50% increment on year-to-year basis. Yeah, should I go to a house a year ago in Sunshine Coast? No. There we go. Okay, now we go back to the Gary time, and
Oh,
then
right.
with the election and everything, and the U.S. finally, you know, Trump is not happy, but
Trump's not happy.
you know, it is what it is, right?
It is, yeah.
Yeah. So,
So I just did three quick things. One is why a lot of people couldn't work out why the stock market went up after Biden won, because Trump was always saying that they were the best team for the American economy and the stock market. And the reasons are probably that Trump or the Republicans didn't lose the Senate at the moment anyway. And that meant that Biden can't get through, or the Democrats, a lot of these wacky tax hoists they were going to do. So, for instance, capital gains tax they were going to increase. They can't get that through at the moment. The other thing they were talking about doing was actually, which I just thought I'd mention, is having capital gains tax on unrealised gains. So that means that if your house price, or so your apartment, if you're an investor and your apartment or your stocks have gone up, even though you haven't sold them, you still got to pay a capital gains tax.
that's just
Which means everyone's going to have to rush off and borrow the money to pay the tax, or they'll have to sell. So I don't know. I suppose
I don't even know how that's going to work, to be honest.
Well, I could see it. I think, yeah, I mean, it'd be good to see it in a game thing. I mean, presumably what happens is you pay your tax one thing, and then if your shares go down, then your taxman gives you money back the next year or something. I don't know, but it just seems a bit daft to me. But anyway, there we go. I mean, if it's not if you haven't realised it, it's not a gain, is it?
No, it's not a game. Yeah.
So the other thing is that, of course, with it means that they can't probably play around with the big tech companies won't get broken up, which is one worry that people had. And the other thing is that the Europeans are sending a lot more money to the US to invest, and that's really shows just how weak Europe is. Okay. The other thing I thought I'd just quickly mention, given the audience, is that I had a look at China the last couple of weeks has re-evaluated its 5-year plan. Okay, and that is to go for higher quality growth. That they realise that they've spent a lot of money on redundant infrastructure. Like I remember when it came in, and the airport was like 3 times as big as what they needed. You know, and the trouble is, of course, by the time they build up the volume, you know, the thing's looking a bit old. But anyway, and then they're going to go more into the value model. So they've obviously got their sights on the better quality machinery, etc., etc. So they'll be after the Germans, the Taiwanese market, the Japanese, the Koreans, and the States to some extent. They want to introduce more innovation. They want to become more self-reliant. One of the things that some people have said, look, they've tried for 15 years to get the semiconductor market, they haven't been able to do it. So we'll have to see what happens there. But on the other hand, you know, I look at it and think, well, they're ahead on the financial services. I mean, some of their payment systems are far more sophisticated and quicker and better updated than anything we've got in the West. That's probably because they didn't have the incumbent people there trying to slow it down, you know. But it's great.
But it's not that well regulated. Like I know in Australia, the finance system is very well regulated, and you know the reason why they went up so quickly in such a short time is because there's just not that many restrictions on it.
No, I'm talking about more their
good and bad thing.
Their payment systems and their tech.
That's right, like Alipay, WeChat Pay,
kind of thing.
you know, that kind of thing.
It's amazing.
Yeah, you can use WeChat to invest into stocks and get a fixed returns and all that. And then everything just on your phone.
Yeah. I mean,
and then
Max has got his cash stash on his WeChat.
Yeah, that's right.
It's unbelievable. So, the only thing that's been said is that one thing that China is, because of their controls on the internet and everything, they're making it more, you know, internally looking, is they cut themselves off from what they call the open source learning, which is been found to be very effective in the States now. So if they do that, then that will actually restrict their ability to innovate, etc. Because you learn so much of that.
That's right.
Then they intend to shift more decision making to the local government and private sector, which seems to me a bit funny, because what I see is they're being more authoritarian over the private sector over the last couple of years than before. So that doesn't seem to meet what's actually happening on the ground. But they intend to expand solar, wind, ESD and renewables, which is great. And the last one is they want to make the RMB to be the reserve currency for Asia. So, take over from the dollar, which is going to be a real battle royale, I can tell you. Coming back, last thing quickly is just the States. Most stuff I read is doom and gloom about the States economy, etc. Obviously their COVID's pretty dire at the moment. But if you actually look at some other sets of numbers, their unemployment rate is now down to about 7%. They've been creating about 1.7 million new jobs every month, which is quite large. It's a big economy, but still quite large. A lot of those jobs are coming from small business, which is quite amazing, because everyone thought COVID would absolutely destroy small business.
That's right. Yeah, I thought of that as well at the beginning.
What it is that they think it is anyways, the US changed its bankruptcy laws. So they've got this Chapter 11 bankruptcy for the large companies. They've introduced the same principles to the smaller companies. So they think that's what's been happening, is companies have gone down. They've still got the goodwill is still there. The people who obviously know how to run the company are still there. It's not their fault because of COVID. So basically they just declare bankruptcy and move on to this protection, and then move in and create a new business exactly as what they were doing the same day before.
That's right.
And that's kept the employees in jobs, etc. So that's really good. And the other thing is that on industrial, remote manufacturing, overtime's gone up, which is a really good sign. I told you already that interest rates dropped straight after the election. The bad news for that, though, is it's not good for the banks.
No.
Which will be squeezed. The bigger banks will be okay, but it's really quite worrying for some of the smaller regional banks, and the Americans got a different banking system to us. So that there could be some problems here, because some of those are quite weak already. Savings are still high, though they're coming down as consumers become more confident. And inventories are declining, which is great. Housing construction is really on the up. Although non-residential is down. Equipment spending's up by 70%, which is huge. And the other one is consumer durables. Have gone up by 60%. Now that is massive. That probably reflects, they think, that people haven't been able to go out and spend money on services. So they bought another fridge or something instead. But nevertheless, that's huge. But it's looking like America's going to have, COVID aside, is going to have a good Christmas. Because that's really important for the retailers, because they make most of their money in 2 or 3 weeks before Christmas.
That's right. That's right.
So that's it. So looking good. The only reason I say that is because we're going to be pretty similar by the looks of it.
We are.
So
okay. Thank you, Gary. Thank you for the very thorough analyst for the foreign war.
I'll talk next week about that.
Sure.
Picked up.
No problem. So stay tuned for next week.
Okay.
And thank you so much for watching this. And we'll keep improving the show. We'll keep bringing you the latest news, more data, and more opinions on what we think about across real estate, finance, and international relationship. So if you are interested, please make sure you tune in, subscribe to the YouTube channel, and then let's just go from there. This is Peter.
And this is Gary. See you next week.
We'll see you next week.
Cheers.
Cheers.